Now we are going to discuss bad debts and doubtful debts assessment. The bad debts and doubtful debts. This is a trial balance. Think trial balance debit and credit. Debtors. Think example. Debtor available trial balance 56,000. Think about. And bad debts also available trial balance. Bad debts. Example 3,000 bad debts. And allowances for doubtful debts. Allowances for doubtful debts. Think allowances for doubtful debts 1st April 2023 opening balance. Think example allowances for doubtful debts opening balance equal 4,000. Therefore trial balance as at 31st March 2024. This is our account period. This is a trial balance. Debtors available trial balance. Bad debts available and allowances for doubtful debts opening balance is given. The adjustment here is given as bad debts. This is adjustment. Think bad debts available with adjustment. Think example 5,000, 6,000. And given allowances for doubtful debts 10% based on remaining balance of trade receivable. Allowances for doubtful debts 10% remaining balance of trade receivable. Given adjustment like that, you have to know how to record in the ledger accounts. Bad debts available trial balance also. You have to prepare 4 ledger accounts. Effect for debtor as well as bad debts accounts and doubtful debts expense accounts as well as allowances for doubtful debts. 4 ledger accounts. This one debtor it is equal trade receivable. Debtor and bad debts and doubtful debts expense. Think doubtful debts expense accounts and allowances for doubtful debts. Allowances for doubtful debts. Think normally allowances for doubtful debts is asset accounts. Data is asset accounts. Bad debts expense accounts and doubtful debts also expense. Right, from the beginning take the balances available in the trial balance as BBF. Think data as a balance brought forward debit side. And bad debts also given 3,000 trial balance. If it has given trial balance, those are recorded already. Now should be included as a BBF. And allowances for doubtful is also given balance. Think credit side as BBF. Right, if it has given trial balance, those values should be included as a balance brought forward. Then think adjustment. Bad debts has given 6,000 and allowances for doubtful debts 10% of the remaining balance of trade receivable. If it has given adjustment, those are not recorded yet. Therefore, think bad debts, effect for data increase, double entry, debtors account credit 6,000. Think bad debts available in the adjustment, those are not recorded already. Therefore, effect for data increase, decrease, debtors account credit as bad debts and bad debts account debit as a debtor. Right, then you have to calculate remaining balance of trade receivable, closing balance of debtor. Debit side increased 56,000. Take that value credit side and difference value as a balance carry down. This is a closing balance. It is called remaining balance of trade receivable. Based on that value 10%, you have to calculate allowances for doubtful debts also. Therefore, think 50,000 closing balance. Therefore, you have to calculate allowances for doubtful debts based on remaining balance of trade receivable 10% equal 5,000. This is the doubtful debts. But think normal double entry doubtful debts expense account debit, allowances for doubtful debts account credit. But if it has given balances in the allowances for doubtful debts accounts, difference value should be recorded. It may be under provision, it may be over provision. Think provision 4,000 but should be provided 5,000. Opening balance is lower. Therefore, difference value, it is called under provision. Therefore, when we have records in the ledger accounts, if it has given opening balance, normal double entry, doubtful debts expense account debit, allowances for doubtful debts account credit. But if it has given opening balance, difference value should be records. Think opening balance is lower, therefore difference value should be considered as an under provision. Think difference value equal 1000 should be records as doubtful debts. Right, like this also can be records. Think closing balance 5000 should be recorded as a closing balance. Here as a balance carry down, and that value should be included credit side as a BBF, as a balance brought forward. Then difference value should be transferred to the doubtful debts accounts. Difference value. Think debit side increase. That value should be included credit side also. Think difference value equal 1000. Allowances for doubtful debts account credit as doubtful debts, and doubtful debts account debit as allowances for doubtful debts. Think this is under provision. Allowances for doubtful debts. Think there are two expenses, two assets. Right? When we are going to disclose on the financial statement, any organization, it may be sole proprietorships, partnership and company, bad debts is expense should be closed. All the expense accounts should be closed. Therefore, debit side increase, take that for credit side. Difference value should be considered as an income statement. This is a closing entry. And doubtful is also same way. Debit side increase. Therefore, take that value credit side also. And difference value should be considered as an income statement. This is called closing entry. And when we are going to disclose on the financial statement, debtor minus allowances for doubtful debts should be included under current assets. Then this is a statement of financial position under current assets as a debtor. Think debtor closing balance equal 50,000. Think how to disclose on the financial statement minus allowances for doubtful debts. Closing balance equal 5,000 should be deducted. Therefore, net value should be input last column. Think how to disclose any organization on the financial statement. Assets, bad debts and doubtful debts, expense should be included under distribution expense in the income statement. Therefore, this is income statement. Think under distribution expense. Under distribution expense as bad debts. Think as bad debts. Total value 9,000. Think trial balance also given bad debts. Adjustment also available bad debts. And as doubtful debts. Think under provision equal 1000 should be considered as expense. As doubtful debts 1000. Therefore, this is a bad debts and doubtful debts adjustment. You have to apply matching concept also. Income should be matched with its corresponding expenses. Bad debts and doubtful debts should be included income statement based on matching concepts. But allowances for doubtful debts based on prudency concepts. Prudency, asset and income should not be overstated. Liability and expense should not be understated. But matching concepts, income should be matched with its corresponding expenses. Therefore, debtors also created when business gone to sales. For increased sales, credit sales available. As a result of credit sales, debtor created. Therefore, income should be matched with its corresponding expenses.